This is Jim Emter, Van Ahn Company, Alexandria, Minnesota, with your closing grain and livestock comments for June 1st, 2018. Corn on Friday down 2 to 2 3/4. Beans up 2 to 3 1/2. Chicago wheat steady to down 3. Minneapolis wheat down 3 to 5 3/4. Kansas City down 1 to 1 3/4. On the week, corn down 14 1/2. Beans down 20 1/4. Chicago wheat down 19 3/4. Minneapolis wheat down near 38, and Kansas City down 23 1/4. As we look to some of the major news here as we finish this week and looking to next week, trade tariffs now from potentially EU, Canada, and Mexico add to those of China and create uncertainty around the market. And with Mexico, one of the big corn buyers here of U.S. corn, I just think that creates an edge around the market where some of the traders are a bit risk off here in front of that. We've also got managed money liquidation that seems to be accelerating to some degree in commodities. Strong U.S. dollar having a little bit of tally on that. And we've also got a 5 to 7 day rain outlook here that looks very promising for much of the corn, soybean, and wheat growing regions with good coverage forecasted. We'll see just how good it is coming out of the weekend. But if it is strong, that's going to be one of the catalysts that maybe breaks us down to these key support areas into next week. Where do those support areas lie? Well, we're close to them already for corn and spring wheat. For corn, it's around that 385 to 392 mark. We're going to settle right against that upper end of that range there. For wheat, it's right around that 607 mark, which we're near trading now off the July. Little room to go to get there off the September. But those we think are going to be some pretty good support areas for those two market. Beans, on the other hand, had the upper tone here today. Optimism that China is going to continue to buy beans even despite some of the harsh rhetoric around has got the bean market revved up, along with Brazil needing to catch up from the trucker strike. So that's brought some support there. Support in beans rely on 10.11 to 9.99, which we're a good 20-25 cents from right now, and resistance stands at 10.60 yet. So we're kind of smack dab in the middle of that range. Did have a lower weekly close, as we reiterated, with the 20 1/4, but we'll see where that shakes loose. As we come to next week, we're going to watch those weather trends. We do have a warmer and drier tone in both the 6 to 10, 8 to 14 day. Nothing overriding, but we think that could bring some weather premium in towards the latter part of next week. It may be a little bit of a rough start to the week if we get it rains advertised as they're forecasted right now. If they're not, then we can pick up the bull steam here a little bit. So we'll watch that closely over the weekend. Feeder cattle on Friday down 57 1/2 to 107 1/2. Live cattle down 15 to 112 1/2. Hogs steady to up 97 1/2 on the week. Feeder cattle up 140. Live cattle up just 25 cents, and the hog market up 340. We had cash cattle trade at 110 live. We had exports very good this week. So we really think and continue to reiterate the fact we see cattle as having a bottom, just needing to get that next bit of news to get up and get going. We're all dolled up. We just need somewhere to go here, and we can get up to those upper end price counts if we continue to see good export demand, and if we can begin to see packers bid up for cash, which we think will happen here in the summer. Hogs, on the other hand, cash is slow to advance with the futures, and that's going to be our limiting factor. We really look for hogs to be somewhat limited here in the near term. We do have good export sales, but the numbers are just too overwhelming in our opinion to get up too much over that $80 mark. This has been Jim Emter, Van Ahn Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great weekend.